What is up, traders, and welcome back to my YouTube channel. Thank you so much for tuning in. Today, I'm going to be hitting a market recap, market review, and forecasting. So I'll start with the currency pairs. Then if time allows, I'll go on to Nasdaq, gold. So yeah, let's jump straight into it. If this video is informative and provides value to you, please hit the like button. Anyways, let's jump into it. So first, right, let me start with the EuroCAD. Yes, let me go from EuroCAD going downwards. So EuroCAD, this is what we have. Let's go to the weekly time frame. This is really clean and straightforward, right? We've had our first touch, our second touch, and then if you've done market reviews, market recaps, you know that at times market creates an impulse and then a reversal type of formation and then breaks out and then creates another reversal pattern formation, which is ascending channel, breakout, ascending channel, breakout, then goes down, all the way down. At times it moves in such a way that the second breakdown is gonna move in a way that's gonna create a double top here, right? Create a double top and then move to the downside, right? So these are the things you get only if you watch other people's market reviews, market recaps, like specific people. For instance, I know this because I've watched Andy the Goat's videos, and I've learned this from Falcon Forex, and yeah. So when I see this, I'm not surprised because I've seen it play out, not only from my experiences, but from other people's experiences as well. So this is how I aim to capitalize on this move, right? I aim to, let me just go on to the down lower time frame so you may see. As you can see, we had our first, second, third breakout, a bear flag, right? Then another bear flag, and then it evolved into a bigger channel, right? Bigger ascending channel. But of course, it didn't go all the way for the third touch. But it's normal. Market doesn't always go for the third touch. So here I'm gonna capitalize on the breakout, and this is a nice breakout. Impulse down to the downside. I'll show you something. Let me go on to the 15-minute time frame. So when it impulsed, when price was around here, right, I knew that I'm supposed to wait for a flag type of formation. So I didn't know how the flag type of formation is gonna form, but then I have been looking out for a flag type of formation, and already I'm having something developing over here. As you can see, it's clear even on the 1 hour, but it's much more clear, of course, on the 15-minute, right? On the 15-minute, this is where we look for our entry point. So yeah, it's advised that you come down to this time frame and try to get the best entry point. So far from what I'm seeing, right, I've had my first touch, my second touch, my first, my second. It could come for a third touch, but then it might break out and go to the downside. Remember, those first bullish flags, first bearish flags or first bullish flag, if it's going to the upside, are normally tight and small, right? So it could just break out from this point. So what I aim to do is place my entry point right over here, and then have the stop at the top over here. Okay, this one stop is slightly big, right? It's much bigger than what I would have wanted to get into, but using minimum lot size, I think this trade is fine because look at the targets. We're targeting, firstly, we're gonna target the 90% rule, right? Let me go out. Let me just close this. The 90% rule over here, right? But then the overall, the bigger picture, from the higher time frame, we know that prices could play out and go all the way down to the supporting trend line. But of course, this is more for swing traders, which I would like to take part in swing trading because I don't have so much time to be on the charts every single day, right? So I think this is worth taking, judging from the potential returns. The risk reward of 1 is to 22, which is crazy, right? Of course, it's going to be, if you want to make a lot of money, you're going to lose time for those type of trade, right? Especially if you're moving at minimum lot sizes. So this is what I'm anticipating for the coming weeks actually, and for the remainder of the year. I'm anticipating the price here will be moving all the way down, but I'm just gonna be careful here. And once it triggers, guys, we have to trail our what? It's called, you trade your stop loss. Like, you do trade management, risk management, and then the moment it moves 1% down in your direction, bring stop loss to break even, and then as it keeps moving, also trail your stop loss. Like, go down with your stop loss following the price. That way, you guarantee that even if price doesn't go your direction fully, once it reverses, you're locked in profit, and your profit are secured, um, and you go home with more than 1%, because once it moves 1%, you bring it to break even. Once it moves more than 1%, you start bringing it down, maybe to 1% profit, 2%, 3%, all the way until we get to our profit target, right? But markets are affected by a lot of factors, so just to be safe, trail your stop loss, right? Okay, that's it about EuroCAD. Next, we're going to USD NZD. So USD NZD, we are inside, guys, and so far it's bad, it's good, but overall it's promising. Let me go to the daily time frame, right, to see the bigger picture, to see the nature. So the nature of this market is that we're in a corrective phase, right? We've impulsed, we're now correcting, waiting for another impulse. So we're optimistic that price, according to how it's playing out, we're gonna impulse all the way to the downside. So in the corrective phase, I'd like us to zoom into the corrective phase and see what's really happening. As you can see, we have price first, second, third, and then here, this is what I would like to call a fake out. I think, right, according to how it's playing out, this is just gonna be a fake out. As you can see, it didn't even break out, it just went, it's just playing around here. But as it's playing around, it's creating this ascending channel type of formation. So I'm anticipating that price is going to drop all the way to the downside, right? How am I going to capitalize on this, or how am I already capitalizing on this? All right, for me to show you how I've been capitalizing, let me come to the lower time frame. Sure. So this is how it played out. From this moment, of course, I would have loved to take the trade at this point, right? All right, ascending channel right here. I'm going in and take in. Of course, I didn't see this one. I'm just seeing it right now. But then thank God I didn't see it, because it was gonna reverse. But this is the importance of why you should trade stop loss and bring your price to break even, because if it broke out here, I'm like, yeah, it's going my direction already, and then it plays out, comes back, it plays, it goes, and then I'm now confident that, yeah, I'm the boss in the market. Then it turns around, you see, and then now I would have been in losses, then it plays around in losses until I lose confidence, and then it goes my direction, and at this time maybe I already closed the trade or it hit my stop loss, and now it's in my direction. I feel like, the market is not respecting my setups. The market is just, it's not fair, this is personal. But then check this out, price was just evolving into a bigger structure. The structure, the idea is still the same, but then let price play out. That's why I feel like it's important to zoom out at times. Don't always be zoomed in. So if you're someone who's always trading 1 hour, 15 minutes, you'd have been so sure that this is the place is gonna turn. But then if you zoom out to 4 hours and stuff, you get to see the bigger picture, and you get to see to not be trapped into the small to the small traps that the market creates. So check this out. We have our first touch. Let me fix that. We had our first touch, right? Our second touch, then it played out. Another almost touch here, played out, it came here, and then it reversed. Another touch. Already here, I know that, okay, price action, it's something bigger. It's bigger. So let me just let it play out and create something that I'm familiar with, right? So at this time, I see, okay, fine. Now I've got this trend line on top. I've got this trend line here below. So I'm seeing, all right, what's the bigger picture now? So that's why I decided to capitalize at this point. Yeah, check this out. After I touched, it played around. Then I was like, no, it's fine. Let me capitalize from this flag type of formation. And then I got in. It played around, of course, then it came my direction. Then it created another flag type of formation. I got in again. It went my direction. It came back. Now price is evolving into a bigger flag. So I'm anticipating that, okay, fine. This is another channel, so I'm anticipating that price is still gonna move to the downside here, right? I know this is now the lower time frame, but then I've seen the bigger picture in bigger time frames. That's why I'm more confident that no, I've decided on price direction. So this is how I'm gonna capitalize on entries. Now I'm just looking for entries. I know my direction. I know where my entries are supposed to be facing, to the downside, right? I'm just looking for flag formation, channels like this. I don't know, but then I feel like it's not very clear. At least if it gave me another channel over here, a clearer channel, ascending channel, I was gonna go in, but it's not meeting my criteria. So I'll let that go. So this is what I'm anticipating for USD NZD. Of course, I'm targeting the supporting trend line here, supporting trend line. So, but first the target is here at the 90% root of this smaller channel, and then at the support of the bigger channel, at the support of this bigger channel. But then remember, this is a corrective phase, so I am anticipating that price is going to break out and go to the downside. So if I do hold this trade for the long term, I might hold it all the way to down here. I don't know how long. It might go up until next year. But then look at the target down here, which is gonna be such a profitable trade, and there's gonna be so many entries along the way here. Okay, fine. That's enough about USD NZD. Let's go to Euro NZD. So, alright. Here what I have is an ascending channel again. First, second, third touch. First, second, I'm anticipating a third touch. So of course I have, let's see it on the bigger time frame. Okay, here's the bigger time frame. This is on a daily. So it's been moving correctively. That's what I'm anticipating. It's gonna come down. It might come and touch here and then go all the way up, but then we'll see when we cross the bridge, right? So far I was just aiming for this for price action within this channel here. Let me go to the 4 hour. As you can see in the 4 hour, we're moving nicely. It's respecting the trend line. First, second, third touch. Of course not very perfect, but then I bring it down. Third touch for this inner channel, and also third touch for the outer channel. So yeah, high probability setup. High probability setup. As you can see, as it went over there, started creating an ascending channel here. Right, and then third touch, then it came down, corrected, came down. Fine. Now let's look to how are we going to capitalize on this trade. So me, so far I have been looking for downwards movement, right? But how am I going to go in? Check this out. Check this out, right? So it's still trickling, moving in this trend, in this channel, right? I'll let it play out. So far, if I'd wanted to go into the trade with this currency pair, I'd go with this one over here, because I'd go with this. And then I'll look to buy. This is a short-term buy though, so have my stop loss slightly below here, right? To be conservative, I would have it here, but then if I wanted to make it much tighter, I would have it just below here. Then what's my target? My target would be here. There's already 1:5 risk reward, so even if I become more conservative and put it down here, I still have a 1:3 risk reward, which is a trade worth taking, right? It's a trade worth taking. I'll just leave that here. This is a trade worth taking. Now let me go to the USD CAD, right? Enough about the US Euro NZD. So the USD CAD, we're inside, guys. We are inside. I've been eyeing on this one for a long time. Sure, I've wondered it when it reaches this trend line. I was expecting a reverse, impulse to the downside, correction, impulse, all the way until we reach here. So as you can see, the bigger structure, right? It's giving me a breakout, impulse, win a corrective phase, impulse to the upside. That's my plan on how I'm gonna execute this trade. How am I gonna capitalize on the moves by the USD CAD? Now let me zoom in and show you something. This price, right? I'm anticipating it's gonna go to the downside, but then I'm also being I'm open-minded. That's the possible price going to the downside. But what is probable, right? It's probable that price may evolve into an impulse and a correction and then break out to the upside. So I'm always on the lookout, and that's part of your risk management, your trade management. If you haven't done it already, I suggest that you invest time and learn trade management, risk management. That way you know how to evolve with the charts, evolve with price action, and be able to see the message from the market and any form of potential price reversals or changes in directions, right? So on the 1 hour, I broke. If you check this out, I took this trade because I thought it was gonna go touch here. So first, second, third, it didn't. It broke out. So it went into the direction faster than I anticipated, and then it created a first what? Bearish flag. First bearish flag, I didn't capitalize. I wasn't on the market. Then second bearish flag, I managed to capitalize. Thank God that this week didn't take me out, like took me in, take out, and then go in your direction. That would have been so frustrating. So right now, here we are. We're just gonna let it play out and see. The moment it moves 1% in my direction, I'm just gonna lock in profits and then let it play out, right? And then as it plays out, I'm just gonna draw my stop loss. Now we're now doing Euro Swiss franc. This was the best last week because I had this ascending channel here. It's much more clear around the 15-minute. Here it is. So I put my entry down here. It triggered me in. I didn't see the profit. It went back to the losses. And then in impulse, thank goodness my stop loss is above this and above this one. So I did anticipate that first, second, third, but then it might come and touch this trend line again, but I don't know where. So I put it above the trend line, and it did. Came, hit here, then it impulsed all the way to the downside, right? Which was so beautiful. Such a beautiful trade. And then at this point, it was the right time for me. The moment I opened, I saw its impulse in my direction. I'm supposed to lock in profits here. Lock in profits and let it play out. As you can see, it's back up here, but then I'm still anticipating that it's going to evolve and come down. So the reason why I think it's back up here, price may be trying to evolve into another pattern, a reversal pattern to the upside, right? Because overall, I'm anticipating that price is going up. I'm anticipating that this, according to my forecast and my analysis, right? This, we're in the corrective phase right now. So this impulse, correction, and then correction, impulse to the upside all the way to the top, that side, right? That's what I'm anticipating. That's how. So the trade of the downward is just a short-term trade. It's just good. It's a good trade, of course, but then it's just a short-term trade. It's a short-term trade. So I'm banking more on the move to the upside. I'm just waiting for price to evolve. As you can see, I've got my channel here. Of course, there was a fake out, then break back inside. So I'm anticipating it's gonna come. As it comes to the supporting trend line, hopefully it's gonna create a reversal type of formation, such as a running channel to the downside. Descending channel. Right now we're going to GBP USD. So this trade, funny thing is, when I opened this, it had already broken out. It was somewhere here, right? And then I was like, ish, price has left me, but then that's fine. But then I still targeted that price. If it comes back, a sell limit at this point would do, right? And then it came to that point. Now it's back down here, so it's moving accordingly. It's moving nicely, as anticipated. So yeah, we'll just let it play out. Let me just go out and zoom out and see the reason why I'm making this type of decision. So as you can see, price has been moving correctively all the way to the upside. It didn't touch here, of course. I was anticipating it's going to touch here, so now I didn't. But then it's been coming down. It broke out. This breakout could have been a fake out, but then it continued going down. So now I've decided to capitalize and move to the downside, and it created a bearish flag here. So yeah, that's when I decided, no, let me go into this trade. And yeah, we're in. Let's let it play out and see how it's gonna play out overall, right? Now, as I mentioned, I'm gonna go over Nasdaq and gold again. So Nasdaq, what's been happening here? So Nasdaq, I've been anticipating that price is gonna go to the downside, but then just last week I realized that no, maybe I should evolve with the market. So I deleted my charts and started afresh, and this is what I came up with, right? I feel like I learned this trade from Mandile, who used to clear his charts every single morning and start them afresh. So every time you clear a chart and start it afresh, you get to see price from a different perspective, and you're not biased to the previous price you'd set up. So I feel like it's a good way of being able to evolve with the market and not be biased to one direction, right? So every now and again, I'll clear my chart and start them again to see that is the vision still in alignment, right? Am I still aiming for the same thing, and is price still showing me the same thing, right? So yeah, here we are. So you can see. So on the bigger structure, right? I've got my first, my second. I'm anticipating a third, all right? But then it might not be here, because it could be here. This is the highest price Nasdaq has ever reached. I just marked this out, and then I'm anticipating that price is going to trickle up and then come down, right? To respect and when it comes down, I'm hoping it's going to respect the 90% rule, which is going to be somewhere around here, right? Somewhere around there. And then yeah, so far this is what I have. Got a big flag, and I'm anticipating that price may trickle here, creating a descending channel, and then move up and break out and go to the upside, right? So I've got 2 entry points down here, which is a risk entry point, and then up here, which is a reduced risk entry point. Let me just show you much clearer there. As you can see, I'm thinking price may do this. So this is going to be a risk entry. Risk entry in the sense that price isn't committed to the direction. Price isn't committed to moving to the upside, right? To the direction of anticipated. But then at this point, at a break at this point, at least we're kind of more confident that now price is actually committed to that direction. Especially if it breaks out impulsively, we're not sure that price is committed to that direction, and the risk has been reduced. But here it isn't committed, so the risk is still high. Can tap me in and then decide to move all the way, keep trickling all the way down to the downside, right? So yeah, that's about it with Nasdaq. So I am anticipating the price is going to move up, and I'm seeing these 2 entries. First one down here, second one down here, depending on how price action is going to play out here, and how if price is going to go all the way to the top. But overall, in the bigger time frame, I'm still anticipating that Nasdaq is going to move to the downside, right? Now let's move to gold. All right, gold. Here I was anticipating a sell, right? Because okay, fine. I'm seeing this now that it could be a head and shoulders. This is my first shoulder, my head, my second shoulder. Yeah, so this is my head and shoulder. So yeah, this is what I'm anticipating. I was anticipating that price is going to move to the downside, but then price came back up. Yeah, as you can see. So here, this is because of a target of going downside. A target to go downside like this. And it did go downside, but then it's back up. So let me just wait for price to show me. Let me wait for price action to show me what exactly is it looking to do. But then, as you can see in the other time frames, it's impulse correction, and we're in the corrective phase, and we're anticipating an impulse to the downside, impulse correction, then an impulse to the downside in the bigger picture. So yeah, guys, that's basically it from me. I hope you guys managed to learn a thing or two from this market recap forecast, and seeing how I have been forecasting and doing my anticipations and doing my analysis, right? I hope everyone is happy and everyone is gonna hit the like button, hit the subscribe, and then stay tuned for more videos, right? That's basically it from me. Sure.